The sixth tax write-up that I want to talk about is for those of you that are business owners and entrepreneurs. If you run your business out of an LLC, you have to pay payroll taxes on all of your income. So many people start the business as an LLC. And let's assume that this business that you started is now making $150,000 a year in profit. Pretty good. Now, when you make this $150,000 a year out of your LLC, you have to pay payroll taxes on all $150,000 because that's what the tax code says. That's an additional 15.4% tax on all $150,000 on top of your income taxes. This is your payroll taxes that every employee has to pay. These are your Social Security taxes and your Medicare taxes. But one of the things that you can consider doing is changing this from an LLC to an S Corp, or an LLC taxed as an S Corp, because now what you can do is, instead of having this $150,000 as profit, what you can do is pay yourself a $50,000 salary. On this $50,000 salary, because now you're an employee of the business, you have to pay the same 15.4% in taxes, your Social Security and your Medicare taxes. And then you can take out $100,000 as a profit distribution. And now, because this is a profit distribution, you don't have to pay that 15.4% tax. Now, in order to do this, your salary has to be in line with what is standard in your industry. So if you're in your industry, you should be paying yourself a $100,000 salary. Well, you would flip this. You're paying yourself $100,000, and then you pay 15.4% in taxes on the $100,000, and then you take out $50,000 as a profit distribution, where you don't have to pay the 15.4%. But the whole idea here is, when you make a big enough salary, you can consider switching from an LLC to an S Corp. That way you only have to pay these payroll taxes on the money you pay yourself as a salary, and the rest you take as a distribution. It's still the same amount of money that's coming into your account, but you get to keep more of it because you're switching how much is your salary versus your distribution, and that changes how much money you pay in taxes. Again, I've said this many times throughout this video, this is why a good accountant is so helpful. I'm an attorney. I use an accountant because I don't want to be in the business of trying to manage all of these taxes, because tax laws are always changing. And this brings us to number 7, the bonus item that I was talking about. And the reason why I call this bonus is because this is more on your legal protection side than it is your tax side. But I really want to mention this because as you start to invest in real estate or build your business, you're going to want to create some sort of entity, like we just talked about with the LLCs. And the reason why is because it creates a shield for you and your private and personal assets. So let's assume this is me. I'm missing the turban, missing the mustache, and I'm missing the beard. So this is me. Now, I invest in real estate, but I, Jaspreet Singh, own 0 rental properties in my name. The reason why is because if I own a rental property in my name and somebody slips and falls in one of the rental properties and the insurance doesn't cover the claim and the judge says that the tenant is entitled to $100 million, well, then they can come after my personal assets because I own the property. I don't want to do that. So instead, what I do is I create an LLC, which then owns the property. So I'm going to assume that this LLC is called Jaspreet Singh LLC. So Jaspreet Singh owns Jaspreet Singh LLC. Jaspreet Singh LLC owns the property. Now, if we go through the same scenario, tenant slips and falls. The first line of defense that you want to have is insurance. Whether you have a business, whether you're investing in real estate, have insurance. I know it is expensive, but you got to have insurance nowadays, because as an attorney who's not your attorney, what I can tell you is America is the most litigious country in the world, and anybody can sue anybody for anything. True story. So now you can buy this property under your LLC. Now your LLC owns this property. Tenant slips and falls. The judge says, well, because you don't have insurance, we're going to have to write a $100 million judgment against the owner of the property. The owner of the property is not Jaspreet Singh, it's Jaspreet Singh LLC. And now all the tenant is entitled to is whatever is inside of this LLC. And in this instance, it is just this home. So the tenant takes the home instead of the $100 million judgment, because that's all the LLC has. So they take whatever the LLC owns. They can't come after my personal assets, assuming that I keep the bank account separate, assuming that I treat this like a real LLC. But we can now also get a little bit more clever, because let's assume that, I don't know, just for round numbers, this property is $100,000 and I was gonna buy it cash. So I was gonna deposit $100,000 into my LLC account to then buy this property. The problem is now I have 100% equity in this property, which is nice, but the problem is is this equity is now at risk, because if the tenant takes the property, well, then they take all of my equity. So now this is where we can get a little bit more strategic. Again, good attorneys, good accountants can help you with this. Now, instead of me depositing $100,000 into this LLC account, what I'm going to do is I am going to loan myself this $100,000. Jaspreet Singh loans $100,000 here. That means this property is purchased with a $100,000 loan. Now, of course, the loan is owned by Jaspreet Singh, but Jaspreet Singh LLC owns this property worth $100,000 with a $100,000 loan to Jaspreet Singh LLC. Here's why this matters. Tenant slips and falls. There's no insurance, or insurance does not cover the claim. You want to have insurance. Insurance doesn't cover the claim. The judge says tenant is entitled to $100 million. So they take whatever's in the LLC. This LLC owns this property. They now take the property from me. However, they take this property which has a loan on it. They have a loan on it which is payable to Jaspreet Singh. So they take the property subject to the loan, and now instead of making rent payments to me, they now have to make mortgage payments to me. This is why, again, smart team members are so important as you start investing your money, as you start building a business, because the reality is when people realize you have money, they're going to try to take their hand and put it into your pocket and take some of it for themselves. I want you to protect yourselves, and that means getting a good accountant, getting good attorneys, having good insurance to protect you. Now, before you go, I want to give you one more resource. If you are an investor and you want to stay up to date on what's happening in the financial markets, Market Briefs is a free resource that I created. Where every day my team is breaking down what's happening in the housing market, the stock market, crypto, the global economy, and our own economy into a fun, witty, and easy to read newsletter. You can read Market Briefs in less than 5 minutes every morning, and it's completely free. So if you have not joined Market Briefs yet, I got the link to how you can join down in the description below. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.